Good morning, everyone. Today is the 14th of November. This is Brad Matheny. This is the Plan Your Trade video. Now, we are moving into what looks like a very interesting kind of anomaly setup. So, we do not have the crash indicator indicating any downward movement. We've got this nice kind of an island formation up here, which is setting up a pretty solid kind of a breakaway upward trend. Now, gold is collapsing because of the very strong move in the dollar. You can see this right here. The dollar continues to strengthen on the Trump election win. Dollars up around 106 and a half, and just climbing like a banshee. Remember, back here in September and October, the dollar was down here at 100. This is a big move for the dollar. Okay. And it really comes right after this election. This is the election day. Gold was trading at 103 and a half. Now we're at 106 and a half. This is a pretty big move. In fact, you can see here that, these are up into some of the highest levels we've seen the dollar at in, going all the way back here to 2022. And we could get higher, and gold could come under quite a bit of pressure. So you need to be aware that, this move in the dollar, which is really a vote for strength in the U.S. economy and the U.S.'s ability to lead as a global economy over the next few years with the Trump presidency, is very, very strong. Demand for the US dollar is strong, which is going to put gold under pressure. And really, again, I wouldn't be trying to really buy into any gold until this pressure subsides. Okay. As long as we've got this US dollar trend higher, and the crash index is still elevated, essentially, I mean, I don't think we're going to have any real relief for gold. Now, we'll take a look real quick here at gold and silver. Gold and silver continue to trail downward, 25.58, and silver down here at 29 compared to where we were up at 34. That's a big move, guys. That's, really 13%, almost 14% down. Gold is nine, almost nine, a little over under 9% down right now. Could it go lower? Yeah, I mean, it could. There's nothing saying that gold can't contract all the way back down to this 25.20, 25.50 area. And this is really a reactionary move, guys. This is a move related to, the Trump win. I don't think that if you listen to the news, I don't think you thought Trump had a chance. Okay. And that's kind of where I was before the elections. Not that I didn't like Trump. It's that I did, the news was saying that there was almost no chance. In the back of my mind, I was kind of, and it's just giving away a little too much information, but was kind of hoping that we had a change in leadership in DC. Was not real happy with I live in California, and you want to talk about kind of a messed up state, come out here and see what goes on. I mean, it's beautiful out here. It's why I live here. But, dealing with the craziness out here is just a bit ridiculous. I remember back in the 70s and the 80s, it didn't seem so crazy to me. But anyway, we're getting down into this zone in gold where we will likely see a base and a bottom setting up. So you can see here into silver, we've kind of gotten back into this, this August area, and we've gotten back into this August, September area. I think we're going to see kind of a base and a bottom setting up around this area. And I think you're going to see the same type of setup over here for silver. So really start, in this 29.50, I would guess 29.40, but in that area, 25.34, 25.40, 25.45, 25.50. I think we're going to find some sort of a base over here. I mean, I've been telling you to wait for the ultimate low, but really I think we're going to probably, you might see gold a little lower, but 2950 seems pretty solid. And again, these are, it's tough for me to say. We've gotten such a big breakdown. And again, I can come in here after the fact and I can go, oh, look, we can use Fibonacci and we're coming right back down here to these fullback. You know what? After the fact, you can kind of do whatever you want to do. But the reality is I would, on a leading basis, I would measure from here to here to here. And I would also measure potentially from here to here to here. And now we're talking about being down in this near 1.5 and 3.618% extension, 1.15. So, the theory here again is that this could be an area right in here, and this could be an area right over here for gold. How I'm doing that, and this is using Fibonacci extensions, visual order. So I'm looking for alignment around price data. So the 2.5 and 0.75 and 618 right in this area prompted pretty much this rotation here. Okay. And then we come down here to the 1.5 area. And then here's our 1.5. And now there should be a 50% probably buried in here. It's like I may have to add it. It may not be included. But this gives you an idea that we broke all the way down through the 100, all the way down to the 175, roughly 2.0 level. So this creates a fairly strong base here, rolled all the way back up to the 1.0 level, and then rolled all the way down to the 2.5 level. That's kind of what I was doing with those blocks in one of the videos that I did last week. I think these move in kind of expansion, kind of coordinary blocks. But the strength of the dollar is really what's driving this move in metals. And again, I would think that we would have some potential support in these areas based on Fibonacci, but it's really going to depend on this dollar move weakening. And I hate to say it, but I think we need to see this crash index not necessarily collapse, but let me get a line. I think we need to see this move back into this channel. So I really think that this crash index needs to fall back into this channel, and maybe kind of along this mode. You can see that, this is fairly high levels. I mean, I don't think we've seen anything much higher than that ever since really going back to COVID. So these are pretty high levels. And I would expect that we're going to be looking at a moderate decline back down into these 70 areas, filling this gap. And that's going to be when we'll probably get a downward swing, potentially in the US dollar. I think it's still going to stay above 105, but and that will give us some easing on gold, be able to see a rally. As long as we have this strong move in the dollar, I mean, I don't think we're going to see any big move in metals. So be aware that the dollar has to actually let off of this big rally phase right now. It's got to weaken out of that, and until then, gold is going to continue to struggle to potentially find a bottom. And what's happening here is, the strong dollar is driving a carry trade, kind of an exit, and is driving metals downward as a hedge simply because the dollar is becoming the most dominant currency on the planet, just like I talked about. This is really, if we go back and look at my Predator Fed videos, this plays right into it. You want to know about why the markets are going to be acting very wonky over the next 2 or 3 years? It's this Predator Fed environment. we have gotten into almost like a perfect storm where, as of right now, with a Trump coming into office and the Democrats leaving and losing control, um, you know, we are, and the Fed reacting to what they perceive as threats. We're moving into this scenario where, remember, after COVID and after the global financial crisis, many global central banks and governments and others, I'll just say, because it's really a wide swath of individuals, were holding what was called a carry trade, which is where they could borrow very cheap US dollars from the Federal Reserve when interest rates were very low. And they could go ahead and borrow it, you know, a 0.5% US dollars and convert it into their currency. Say they borrow 100, 200 million and they convert it into their currency, and then they roll around in their market getting 7, 8, 9% or 10, 12, 15% loaning to corporations and individuals and whoever needs it. And then they turn around after a year or so and they collect their 15%, and then they turn around and pay back their loan at 0.5%. Okay, so that's called a carry trade. You're borrowing US dollars at 0.5%. You're using that money to make 15, 20%, and then you're turning around paying it back at 0.5%. Everything works out just fine, especially with a anchored low US dollar with a very low interest rate. But now, with interest rates up at like 7, 8, 9%, and the dollar shooting through the roof, guess what? Those foreign currencies are not worth the same level. So, I mean, the dollar's gotten much stronger. That's going to put pressure on foreign currencies. That's going to wipe out that carry trade type of scenario. And what's going to end up happening is these foreign nations are going to end up either defaulting on their debt or having to spend huge amounts of money to get out of the debt that they've got. Because if they want to keep the debt, rolling, they either have to pay back what they borrowed, okay, or B, they have to roll it over into another debt instrument at now 8.5%. And again, that could be very deadly because the whole cost of keeping that instrument while the dollar is strong through a Trump presidency, while the foreign currency continues to weaken, puts even greater pressure. It's kind of like, well, I can't afford my credit card, so instead of holding it at 12%, I'm going to roll my debt over to this new one at 15% and just pretend that it'll go get better. So again, this is a very interesting type of dynamic, which is why my anomaly event is really coming into play here. So we're on the SPY, we're at 97, 93. We're up a little bit. We have my SPY cycle pattern is a temporary bottom in trending mode. You can see how I've marked this. This is a 1 hour chart, and you can see that I would mark this as a temporary bottom, indicating that we're likely to see some sort of a base bottom here, moving slightly to the upside. And then we have this gap reversal and counter trend mode, then a reversion rally, and then an up, down, up in counter trend mode, which I think is going to be a down, up, down. We have top resistance, flat down, harami, and a temporary bottom. This is where I think we move into the end of the week. We move into slight downward trending. So again, moving into this, possibly some upward trending here, and then rolling into downward type of trending into the anomaly event. So again, I think we're going to be rolling into that support zone. Now, remember, we're really looking for, when I say the support zone, what I'm talking about is this big gap right here. So we can go from, well, we'll just go from the low down here. So we're really going to be kind of rolling around sideways in this channel. So let me draw a line here off of roughly this level. And I think we stay within this range. In theory, we have another gap right here. So I'll highlight that as well. And where we come down to, folks, is staying above this gap is probably key to staying away from this gap. So, in my opinion, and I'll get rid of this real quick and I'll show you with another drawing. If we stay up in this area and we never see a big breakdown in the SPY, eventually we will roll probably into consolidation and then roll back out of it, meaning we'll probably close this one gap and then roll back out of it with a rally. The SPY honestly is going to be holding up, in my opinion, a lot better than the other markets through my anomaly. Now, if we close and get below this gap into this area, then more than likely we are going to move into this gap area, maybe fairly low, maybe even down here, and then rally out of it. So what we have is a kind of a gap opening, setting up these rolling patterns. And again, I think we're going to be rolling sideways. I think we're going to get into this tight little channel. I think the dollar is going to probably stall out just below 107. I don't think we're going to get too much higher than 107, 107 and a quarter. That's a very strong dollar, in my opinion, compared to where we were. I remember a couple of years ago, was betting a guy that I knew a dollar. He told me back in 2000, what was it, 18, 19? I don't know, it was right around COVID, is COVID, that the dollar was going to collapse. It's going to be the end of the dollar and blah, blah, blah. And I mentioned to him, I said, I'll bet you a dollar that the US dollar, kind of a joke, bet him a dollar that the dollar was going to continue to rally and be the strongest currency on the planet within 5, 7 years. And I don't know where he is now. Haven't talked to him in a while, but look at this move. I mean, it's just this is what this leads to, ladies and gentlemen, is a disruption in the planning, so to say, of uh, and I don't want to say it as central governments, but let's just call it central governments. So, they were planning on potentially having, some sort of a new reset or whatever you want to believe. I think what they were talking about really is a more centralized, balanced type of economy. I think everybody realized or tried to realize that, hey, the dollar is weakening and the US can't keep this up forever and blah, blah, blah. We need to be prepared for, some sort of a consensus like the euro, a consensus government currency where everything is balanced by a global trade commission, the European Union. And now, after COVID and after what's gone on, I think what's happened is the currencies themselves have kind of rebelled against this, saying that no, we're not going to be trapped in this Pandora's box, so to say, and we are going to react how we are going to react based on the strengths and the weaknesses related to every regional economy. And I think this is what's causing a lot of this move, is that it's kind of like you thought you had it caged, you thought that there was nothing that was going to happen, and then COVID hit. And then when COVID hit, everybody shut down, everybody essentially separated. And that's what happened really when the government shut everything down. We separated back into our own little bordered countries, and then everybody started taking a look at everything, not as a whole, not as a global economy, but as individual economies, individual isolated economies trying to operate in a global sphere. So that's where we're looking at here. And what you want to remember is the next 6, 7, 10 plus months are going to be that, and possibly even longer, that type of a global economy. No longer are we one globe marching hand in hand into whatever is coming in the future. We are now really isolated, individual, localized economies with our own risks, individual risks, and with our own individual strengths, moving forward, which is why I think we're going to see the anomaly event, which is going to be related to banking, global banking, and possibly hard assets. And that's why I think the SPY will come down into this 570, 580 area, maybe only 575 to 585. That's kind of this area here. And try to find a base. But we are likely rolling into that anomaly pattern right over in this area, right around the 19th. So I will move this. I really do believe that this is going to be the top right here. This roll, consolidate, and then right around the 19th, 20th, we start rolling into what I think is going to be a deeper downtrend. It's going to become more evident here on the QQQs. Okay, it's really going to become evident, and you can see how I've drawn everything over here. I'll get rid of some of these. But if I were to estimate, like I said, I think we roll into this flagging formation right here. Get rid of this so you can see. We roll into this flagging formation, flag out a bit, break down into consolidation, and then potentially break down even further. Okay. So this is really right here, the 19th. That's the area that I think that we have to watch. This area right here. I think that's really what's coming up, and it kind of makes sense. Now, I'm going to try to keep this a little shorter, but Bitcoin really, what a move. I mean, we talked about this yesterday about how Bitcoin was kind of flagging out here into this flagging pattern. And I talked to you guys about how, we could argue that we had broken into this bigger consolidation pattern, which I drew here in this rotation here in pink, and how we had rolled through this pattern here, indicating we had an A or a B. I think I indicated we had about a 65% chance of an uptrend and a 35% chance of a downtrend. Here we go. We rolled all the way up and try to keep off my lines. And now we've gotten this 92,000, 93,000. I don't know if you guys remember, but months ago, probably way back in August or September. But I indicated a long, long time ago that Bitcoin was going to rally way up into the 90,000, 92,000 range. And I doubt I have any of those drawings left. I think I cleared everything. Yeah, there's nothing left on my chart. I'm going to have to go back and find it. Well, there's this right here that we could get up to 102,000. So let me move this. And like I said, what I want you to realize is that we've broken out of this big channel. We're rallying upward. We've gotten up to 93, 92, 93,000 as a high. To be honest with you guys, this move, this carry, this big rally phase could easily rally right up into that 105,000 area, setting everybody off with this disruption. Now, what's causing this disruption in Bitcoin, this move, is the perceived intent that Trump is going to, so to say, deregulate and move the US into a pro Bitcoin kind of a format. And that's going to give us a lot of real strength. That means that a lot of money that here in the US has been, so to say, blocked from investing in Bitcoin. I mean, you can do it, but I played with trying to move some money into Bitcoin a while back. And anyway, it was a pain in the ass, pardon my language. So I think this is a real elation. Now, getting that policy through the government in the US could be a different issue. So, again, up into this 102 area, and you look here daily, where's our excess phase peak pattern. Really, if we were to take a look at this, so let's come back over here just for the heck of it. So, okay, here's our ultimate low, right? Let's call this our ultimate low. And let's call this our pullback into flagging. Make sense? There's our deep decline into the low, moving into pullback into flagging. This then is our breakaway into consolidation. This is weekly, guys. So this is a very big excess phase peak pattern. And now this is our breakaway. This is our rally to, oops, the ultimate high. And rally to the ultimate high leads me to believe that we're going to get up into this 100,000 area, maybe even higher, maybe even up into this 120, 125 area in Bitcoin, just simply because I can measure this move here and apply this as a 100% measured move to the breakaway. So right in here, and that puts me up at 116.85. So maybe move this down and or break this down into the middle area. Yep, 105. So maybe here, or as I've drawn already from that point, basically 101. So again, you've got these real targets right now for Bitcoin based on this big excess phase peak pattern. Now, look, I can see this already in because I can see the low, I can see the flagging, I can see the consolidation pretty clear, right, guys? So you have your number one, you have your number two, you have your number three, you have your number four, and now we're seeking our number five. It's pretty clear to me that we've gone through this phase, through the consolidation, and now we're seeking the ultimate high. This is the rally phase that once we hit the ultimate high, we're going to be looking at a peak up to the high, and then we will likely pull back, flag, and then start a breakdown period. And it could be fairly destructive. But if you can see this inverted low, ultimate low, pullback, flag, breakaway, consolidation, breakaway to ultimate high. We're playing perfectly into that rally phase to an ultimate high. And now looks like we're going to probably target the 103 area, maybe as high as the 116, 118 area in Bitcoin. I know some of you are going to love that. We are watching for signs of weakness. This big rollover that we saw down here, so come back to hourly. And it's very interesting. We see this big rollover here through this flagging formation. This does set up, and I'll just draw it real quick. It does set up a peak, a pullback, and a flag. Okay, so we have to be cautious of this. We could, as we're rallying up to the ultimate high, we could get a bit of a pullback through this channel. We've had this very big rally. So, if you look here, we had a peak and then, well, actually, we had the peak here, pull back, a rally to a new high. Okay, and then a peak down, pull back, and then a rally into that same consolidation channel, then into a pullback, and then a rally to a new high. This rally to a new high tells us we're now in upward trending. But this pullback here could lead to, a collect consolidation and maybe back into this area, or maybe just here and then rallying upward. So we need to be aware that there is that real risk of these excess phase peak patterns playing out in the short term. Now, that big daily pattern that I showed you going all the way up, that on the weekly, that's our big broad pattern. Okay. This is our big, broad, low consolidation rally. That's our weekly, broader context pattern. When we go back down into 1 hour or 30 minutes, now we're looking at shorter term types of price action, shorter term types of trading. And what I see setting up here is if we get this rollover in Bitcoin right here, we've got to protect this 88,200 level. Otherwise, we're going to head down right down to this level, 85,200 on this consolidation. And we're setting up a pretty solid, I'm going to make it blue, I guess. We're setting up a pretty solid pattern right now. It looks very clean, but we'll see how it plays out. So we're going to go back to SPY here. I don't want to make it too long. We are getting kind of set up in this same scenario here. Let me dump this and that. And you can see here, we've rallied off of this area, come all the way up, pulled back into a bit of flagging. And now this is where we've kind of got to be cautious of this pullback mode, breaking down into consolidation before attempting to maybe move down to my ultimate low. So you can see how, this is a 1 hour chart. So, what would happen through consolidation? Let me draw this again. It kind of plays right into my pattern. What would happen in the consolidation is we would get down into consolidation, maybe roll up a little, and then roll down through the low of the consolidation pattern into my ultimate low type of setup. You can see how this excess phase peak pattern plays very cleanly into my expectations. So at this point, guys, we're heading into the end of the week. It's Thursday. We need to kind of watch how this kind of plays out. If my analysis is correct, we're going to be very range bound for the next, 4, 5, 6 days. Gold and silver are struggling to try to find a base or a bottom. It's really all going to depend on what the dollar does and watching this crash index. Remember, here's the crash index symbol. You could use it all you want. This is it right here. Copy and paste, type it in. The whole idea here is you can watch this on an intraday basis or a daily basis like I do and really realize that until we see that reversion, you can see here that, like I said, typically if I were to put up let's put up an envelope. So let's come here, indicator. We'll go envelope and we will set it up for inputs of a let's call it a 380 day, and we'll set it up as a 3% variant. And what we're looking at here is basically a 1-year envelope. Okay. So what we're looking at again is seeing the crash index move into that 70, 60, 70 area. We're elated right now. We're excited about a Trump presidency, is what this is saying. But a reversion for this would likely be back down into this 70 to 71 area for this crash index, which would again be, in my opinion, a great pullback. And that's exactly what I'm looking for through the anomaly event, is essentially a pullback from this level down into this level, and then we move into 2025. Okay, guys, so that's where we're at. I'm going to leave you there. Go get some today. Remember, we're looking at a temporary bottom. Oop, there's my cycle patterns. We're looking at a temporary bottom in the SPY, and we are looking at a consolidation pattern. This way. We are looking at a top resistance pattern in gold. So be aware. We're looking at a top resistance pattern in gold, and we are looking at a consolidation temporary bottom pattern in trend mode in the SPY. Okay, I'm going to leave you guys there. Be good.